Well, hello everyone, and welcome to another episode of Monthly Market Report. It's your host here, Alissa Coram, and what a month it's been. We sure do have a lot to talk about, whether it's the crypto swings, the huge shifts underneath the surface for growth stocks into a defensive area. Where do we stand now as the NASDAQ tests support at a long-term level? Well, here to give us his thoughts, as he does every month, we look forward to it, is hedge fund manager Jim Roppel and founder of the Roppel Report. Jim, great to see you.
Great to see you, Allie. Do you think we're ever going to do this on a day like when it's not crazy?
I don't know, but actually it's a good thing because I think that's when people always want to hear from you, Jim, but when things are uncertain, they really want to get your take. So I think it actually is the perfect time to get some Jim wisdom. So I'm looking
Let's
forward to
do
it.
it.
Okay, so first, I think we have to talk about the current market. We'll talk about February's performance, the shifts that we saw underneath the surface, and of course, as you're always so great at doing, take that step back approach. What are the themes that we need to focus on? So all of that is very important, but let's roll up our sleeves and get right to it. I think what everyone wants to know is how you are handling the current market weakness. We've clearly seen a big shift, Jim, for the major indexes with, going from this chop that we've seen since mid-December and now taking a leg lower. So do you think, I know you're going to remain flexible, but do you think that this support here at the 200-day line is going to hold? How have you been handling the market here with the destruction, especially for growth stocks?
I started handling it on AI Black Swan Monday.
Yeah,
I,
that's true.
you know,
So
I
late
started,
January.
yeah, I started getting defensive back there, but I remained optimistic that we were going to break out over 20,000. But the AI names really never recovered from that hangover.
Mhm,
Um, and so as we almost broke out about 10 days ago, I was really optimistic. And
mhm.
then the flush came and it forced me to go to extremely hedged positions. And at this minute, it becomes really hard. Like I try to sit for 4 to 6, quarters in monsters. But when you're in massive size, you have to either trim significantly or hedge a lot. Not really a big trimmer. I am a little, but my hedge is
When you have a huge
right.
winner on your hands, you've
Yeah.
got
Oh,
a big cushion.
anything that's like up 5 or 10% or down 1 or 2, it's just all that's out.
Yeah,
I'm
different
just trying to
scenario.
sit with a couple big positions, and hedging is an art. It is not perfect, and you have to work these positions. You can't just like set it and walk away. So I've been getting into defensive mode since AI Black Swan Monday, Asteroid Monday,
Yeah.
and it's just so will it hold the 200? I'm afraid it's not. Friday was a little optimism. It bounced at the 200, and then today just
Mm.
really ugly action. But by no stretch do I think we're heading into a bear. I mean, we can talk about I have like 10 reasons why.
Yeah. Okay. Well, let's talk about those reasons. But first, just to sort of tie a bow, if we could, on your thoughts on leaders. Do you stick with them? Do you trim them? Do you hedge them? I think Nvidia is one of the examples that you wanted to use. This is the poster child for what got hit hard on that DeepSeek AI Black Swan Day, January 27th. Was looking a little vulnerable, or just not as strong of a leader as you would want it to heading into that. One warning sign potentially was just sort of the nothing burger quarter that it had last quarter, failed to make new highs. But at any rate, if you were sticking with it, then it definitely seemed like the tone changed in a pretty big way on that DeepSeek news. Other related stocks also providing evidence for, hey, maybe there is a little weakness here underneath the surface. And now it does look like Monday it did have its lowest close in a number of months here, Jim. But if you take a longer term view at this stock, it has, it's had a big, big move here. So is this something that you are still in the hedging camp? And what's gonna change that ultimately from hedged position to, hey, it had a good run, and let's move on to something else?
So you're 100% accurate. You had a lot of evidence with ALAB, ANET, Credo, a lot of the other facilitators of the build out of data centers were extremely weak coming into earnings. So I was not shocked. I was writing about how I thought they may even miss. What it looks like is they're delayed. It looks like they're delayed a bit. And no matter what I think about fundamentals, it's now like when it pulled back um, last August, it was well above the 200. We're now living below the 200 and we're getting resistance at the 50. So I'm max hedged both short, uh, I'm inverse ETFs and short calls in the money. So I've got a lot of positions working against or, to hedge me
Mhm.
over 153. The show continues, but I believe this could go on for a great deal. I mean, we're now well below AI apocalypse Monday.
Right.
And so the accumulation distribution has been ugly for about 6 months, but the personalities changed. But
Mhm.
I'm not, I've got ample cash available, so I don't need the space.
Mm.
And I think that, you know, how do I say this to you? AI is not only not fading, it's accelerating. The things it could do, I was talking to a hedge fund manager today who was explaining to me how he was using it to code market timing systems, and he knows nothing about Python. He said, what I did in 30 minutes with AI in Grok 3 would have taken me a year and a half to learn how to code. He goes, I
Right.
did it in 30 minutes. And this is pushing through all sectors. I mean, we can just go on and on. NVIDIA, I am patient with. I've been patient with it for a very long time. I am not about to give up on it now. But again, a partner calls me. He's like, "Hey, should I dump my NVIDIA?" And I said, "Well, I think the show is going to be third, fourth quarter this year." I
Mm.
go, "But I'm not willing to. I'm not so confident in that I won't. That I will sit unhedged. I mean, it could blow up and go to 80. Who knows? I mean, it's in a downtrend."
Yeah. Like you said, the character has changed here, but you have a very low cost basis and you're hedged and, willing to sit with it for now. With the AI theme, very strong in terms of the promise here, the technology. You've talked about how this market cycle's internet boom, but even more beneficial potentially, and still in the very early stages. So, walk us through those other reasons that you were saying about the market here at this juncture. Sort of your step back take of things that you're looking at out there, Jim.
Well, I think the Fed put is completely in place. I mean, we're really, everyone's like, oh, call it a year ago, we're going to have 7 rate cuts. That is a very moving target. 3 weeks ago, 2 weeks ago, Fed funds futures prognosticated 1. We're now at 3. The Fed's business is dual mandate, inflation, and jobs, stable jobs. The Fed's job is no one lose money. Okay, straight up. That's the Fed's new mandate. It's not stated, but if the market starts to come unglued, rest assured the Fed's going to start cutting rates and bond yields are coming down. I mean, look, that's what, 40, 50 basis points
Yeah.
in yield. In no time, the dollar's coming down hard. We are getting oversold. Okay, the overbought, oversold oscillators, McClellan oscillator, they are, they're getting into a zone where a bounce could easily start. This is a condition, not a signal. It can get way more oversold, but we need to be on alert here. We're now about 8% off highs on NASDAQ, about 14 or 15 on Russell.
Yeah.
Today was a bad day, and finally, the VIX started to move up. The VIX got in gear today. It started to smell the coffee. It's not panic mode, but it is now elevated. Could it crack 30? If it did, that would be a really strong condition. Um, but the bottom line is, I think we can lean into the Fed and let's look at IAI. the broker dealer index. This is
Sure.
not showing any panic. Look at Goldman, Walmart. I mean, look at Minnesota Mining, MMM. It's almost impossible to believe that we're going to have a big recession with these stocks a few percent off highs. Look at Mastercard, MA.
Mhm.
I mean, look at how about this? Look at Paychex, PAYX. That says job growth and profitability. Look at in the bigger one, ADP. This is the largest payroll processor in the world in all-time new high ground. We are not having a recession. Oh, let me slow down. The indicators at this moment say we are not having a recession. And if these start to roll over, I think the Fed's going to be there to cut rates.
So, Jim, it does seem like in addition to the interest rate discussion, and that was that first warning sign back in mid-December, right? That was Fed related. There have been some other knee-jerk moments here in the market, whether it's Fed related or economic news. But also, I think the big cross current here in the short term that investors are concerned about, and I guess in a way it does tie to the Fed and their stance of sort of wait and see. Let's there's some unknowns here. Let's wait and see before we go down this road of the wage price spiral there, at the stagflation type of period. It's the tariff talk, right? And I think the political sphere in general. But it does seem we get a tariff headline and the market gets spooked. It seems like in the short term, that's a pretty big cross current at the moment, Jim. And
Yeah,
those tariffs are expected to go into effect this week, right? For Canada, Mexico, China. Trump tweeting again today on the agriculture product side of things. So, depending on whatever side you're on, the market doesn't like uncertainty, and right now the market is feeling uneasy about the uncertainty.
we have probably more cross currents than I've ever really seen at one point in a market.
Hmm.
Uh, you have to remember when Reagan came in, the market went sideways to down initially. We have an absolute revolution in Washington. I don't want to get into politics a lot, but I'll tell you this: every move in every industry is dominated by the new administration, whether it's whatever, tariffs, crypto, you name it. They are shaking things up in a way that we've never really seen into a very staid and fragile government. And so I think that this is very disruptive, but ultimately it's going to be incredibly good. Now, the divergence is the backdrop fundamentals, in my opinion, have never, ever, ever been better in my 40-year career. But we have a little hiccup going on. And this is a
Right.
moment. It's a moment. Remember, in the build out of the internet, I'm going to overstate the case, but over like 15 years, Yahoo went up a couple thousand%. And I think it had something like 50% or worse corrections along the way. I am absurdly bullish, like wildly more than I ever have in my life. But I'm well aware of the fact that we're going to have four, maybe five pullbacks every year of 5, 6, 7%, and maybe one 14%er, assuming you're not in a bear market. So this is just another day. It's another moment. And there's a lot of cross currents, fundamentals,
Mhm.
goofy bullish, technical action in the market, fairly ugly right now. But again, it's a moment. And I think everyone's like, remember Willy Wonka, Veruca Salt?
I want
Daddy,
it
I
now.
want it now. I want it now. I want a golden egg. I want a golden goose right now. And like, chill, everybody. Okay, you're not going to get rich every day for the balance of your life. If it was, everyone would be a billionaire and money be worthless. This is hard work. You got to grind through it. Understand where we are, what's happening under the surface. Don't lose your cool. Chill it, and we're going to kill it.
I love it. Chill it and kill it. It's a good new Jimism. Okay, so Jim, I think in terms of the mood of the market, which we've discussed, and this rotation out of growth, a couple things that we can look at: FFTY. One potential proxy to look at here, also ARKK, very risk on type ETF here. These are rolling over here in the short term. Maybe we'll see some bases to come out of this while the money is rotating into defensive areas, like the staples, healthcare name. You have Coke and Johnson and Johnson and those types of names, but also gold, which is an area where a lot of investors flock to safety. What are your thoughts on these shifts underneath the surface, and should traders move, with these shifts, or like you said, be patient, chill, wait for the opportunities in the growth area? That's where you're really going to be making the money.
So it's so odd. If you're a CanSlim practitioner, the gold bar list is the new high list. I have a very big position in gold, but if you look to a monthly or a weekly, it wasn't because I thought the world was coming to an end. I just saw this massive breakout of this
Mhm.
bigger the base, the higher in space. And so I remained very, very long gold. And GDX actually, while bullion can digest, GDX is really in a cup and handle. The handle's a little ragged. And the ragged handle is very symptomatic of what we're seeing in the index. In other words, last August, we had about a 2 month 14% pullback in the index, but it was subtle. It was orderly. The pullback we've seen recently is about 9 days in a row, nearly straight down, which is not orderly. It is
Mm.
aggressive. Today was a bearish engulfing candle,
Yeah.
and other sectors clearly. I'm not interested in buying Hershey's or Procter and Gamble or Coke. The second
Mhm.
the smoke clears, these names are going to fall like a hot potato, but they're indicative of a deeper problem that's under the surface. Again, you have to pair that with yields coming down really, really aggressively. And the dollar rising is kryptonite for equities and risk on. And that is coming down hard. Oil breaking significantly. By the way, if oil cracks 65 underneath, there is no support. And that would be, I think, every dollar a barrel down in oil, it's like $1 billion tax break for the US economy and a multi-billion-dollar break for the world. So oil coming down because of supply increase is really, really good. Because of economic slowdown, not so much. But
Right.
again, as oil gets cheaper, it solves the problem. I mean, the free market is very self-correcting. So I don't know if I answered your question, but there's a lot of words.
Well, you did answer a lot of it, but I guess the question is, in terms of your growth stocks, what sort of price action would you be looking for? I mean, clearly from a market level standpoint, looking for a change in the tide. Let's see if we can find a bottom or a low, establish a low, see some upside momentum here in the short term as a little bit of evidence. Let's see what the leading growth stocks are looking like. So, are you looking for reversals or bounces or retakes of levels for growth stocks? What are you looking for there to get more exposure to the growth area of the market?
Perfect world. We had a bounced attempt on Friday. Today it failed. Hypothetically, something overnight happens, and let's just say we gap down 2% or maybe a bit more, and it stops dead about 45 minutes into trading. The VIX goes to Pluto, put to call goes to Mars. People are just puking all of their names. Like, I've
Mm,
basically everybody should have circled the wagons now around your top two, three names max, reduce size, have cash.
mhm,
When people start to vomit that up, and the VIX goes, and the put to call goes, and the McClellan oscillator goes, and all of a sudden it stops dead an hour into trading, and it halts and it sits there for 45 minutes, and all of a sudden it starts going up, 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 and we get a massive, instead of being down 2%, we close up one or two, get back above the 200-day, maybe even impinge on some of the higher moving averages. Leadership comes in. That would be an ideal scenario. That would be, but I just don't feel like this is going to be a deep V reversal up. I think it's
mm,
going to be more of a time necessary to fix your Robin Hoods, to fix the Palantirs. These names are straight down damaged, and I don't see them just going straight back up in a V pattern.
mm.
a proper base would be formed over weeks and months. And maybe you can hide in your Hershey's. And if you don't, I would rather hold cash than hide in some,
Yeah,
you guys listening are probably not institutions. So you don't have to play. Cash is king at this minute. And the king of the jungle, Nvidia, has a bad cold. A bad cold. And
it
so
does. I agree.
until Nvidia has been the king for a couple of years, and until it rights itself and is living well above the 50, it's unhealthy at the minute. So we have these, again, dramatic cross currents between
Mhm.
fundamental backdrop and activity in the market. The market is not jiving with the fundamental story that we're all seeing. So I would need to see an upside reversal, but I really think it's going to take more of a follow through day that's going to
Yeah.
come maybe from lower levels, or we really need actually is time. More than anything, we need time for the sellers to abate, bases to form, and we need tightness. Okay, there was like CLS. I'm pretty sure that's the symbol. Look at how it recovered after AI apocalypse, and it actually made an all-time new high. That's a V. That's a V
Mhm.
recovery. Well, it didn't hold, and
Right.
now we're back down. And most of these AI-related names are actually below AI apocalypse Monday lows. Oh, okay,
Mhm.
there's a double bottom. I did write about that this weekend. There is a double bottom there. But again, you need to get over 390.
Yeah.
And if you look at Tesla, 440 is a magnificent pivot on the weekly. And everyone's like, well, Jim, it's below 300. It would take 6 years to get there. I'm like, yeah, well, no. This stock has unbelievable horsepower like
Mhm.
crypto.
Yeah.
Wild moves can occur very, very quickly. Do not get too complete or bearish. Don't get all bared up. Um, because when you do get all bared up, that's when the bottom comes. When Jim Roppel's
Right.
net short, rest assured the bottom is very close. And I'm not net short right now. I'm hedged heavily. Um,
Yeah.
I've
We'll be ready to pivot, just staying open-minded, right? Staying open-minded, staying nimble, is super helpful because you're right. If you get too set in one thing, I think either which way, too bullish or too bearish, you can miss the turns in the market pretty easily. You mentioned crypto. I want to go there soon, but first, you mentioned, okay, scaling back your exposure, holding maybe a few select leaders. So I do want to follow up on a couple of stocks super quickly that we did mention last time you were on as sort of potential names to be looking at for 2025. Two that come to mind for me that are growthy, that feel like they've held up well. Of course, I own them, so that's why I'm thinking of them so quickly. But Jim, please add others that you see fit. Even though they didn't have great days today, I mean, DoorDash holding the 21-day line above a rising 50-day, and Spotify as well. So these are still holding up really, really well amid the destruction. Of course, neither of them are tech stocks, really. So maybe that's also helping them at this moment where you're seeing a lot of money flow out of tech.
I think those two names are well, Dash. Well, first of all, I love Spotify. Like I'm a heavy, heavy Max Spotify user. And it's a consumer non-durable. It's one of the it's almost like ketchup. No one's going to go, oh, I'm not going to pay the $7 a month or 10 or I don't know what it costs.
Like Amazon, Netflix, there's a couple of these subscription services that are very sticky.
Yeah, and Dash has one of its Dash is a perfect illustration of the magic elixir. Trading volume in relation in times earnings growth estimates. It is the probably the second or third highest on that metric there is. And I used it yesterday and I'm 90. Okay. Like I took my walker to the door to get my ramen. Um, People are not going to,
You did not.
I have lightning stripes on the side of the walker. So I'm kind of cool.
Okay, good.
I'd have skis instead of tennis balls. But anyway, it's kind of a expectation. No one's going to go out and get their own food, mostly millennials and Gen Z. But my mom had a really bad car accident. And I'm like, well, I want you to buy a Tesla. So it drives itself.
Mm,
Don't go out and get your food, have it delivered to you.
right.
We are elevating here. And this comes into humanoid robotics and robots. And
Mhm.
this is another one of these crazy disruptive technologies that is going to sweep the world. And but back to names, Spotify and Dash
Yeah.
are A plus. But again, if the market gets really ugly, we may have to have a break in even these
Mm,
names to get everybody to puke.
yeah.
And I'm not sure if we're really going to have to get there. Are we down like 7 or 8% on NASDAQ from highs right now?
Let's take a look at the weekly here. I might be able to see it easier from the can we do the Qs? The Qs are
Yeah.
down 8% off highs.
Okay. So at one point today, we were a breath away from 3% down. This is still in the garden variety in percentage decline.
Mm,
What's the scary part is the violence, the quickness of it. And so in such a short period of days, normally a garden variety pullback would take longer to unfold,
mm,
which brings into the play of maybe something's brewing bigger. But I don't know if we're going to have to see the growth consumer non-durables break. I mean, forget Hershey's and those are not growth consumer
right.
non-durables. The Dash and Spotify are. Look at TKO. It's been hit pretty darn good.
Mhm.
And so there is another name that is cuckoo earnings estimates with really high liquidity.
Yeah.
It's these are just the magic elixir, I call it,
Mhm.
is where institutions have to go. Where else can somewhere institution go and get that kind of growth with this kind of liquidity? Normally, growth like these three names is reserved for some low, small, mid cap names. So these are like must owns for institutions. But okay, hold on. We have to look at Meta.
Yeah. Meta
Okay.
and Netflix are also holding up really well.
So this is a really a sign of the times. Meta goes up 20 days in a row and fires 5% of their workforce. That is AI in action. Now it's pulled back all the way down to the 50, but I've never seen a mega cap like this ever. Google did not go up 20 days in a row without one down day. And they were in a growth phase. We are in a new world now where AI is changing. And by the way, they didn't fire low level workers, they fired mid level executives. We are in a new world here. And I think once the market gets to adjust to this efficiency, kind of like when software came in and the internet came in, GDP does not capture this. GDP was created 50 years ago or longer, maybe even in the end of the war. The digital economy is bubbling under like this boiling cauldron, and I am I am I am leaning into that. Although I'm in a defensive position, I'm ready for like nobody's going to be shocked with all of the technologies that are bursting out. If we have just an incredible several years in a row here, this is a tiny little moment we're in. So look at Meta hanging in there
Yeah.
after cutting, getting leaner, reducing their staff and overhead. Bull City, man.
Yeah. Netflix looks somewhat similar as well. Another subscription service here.
Yeah.
Mhm. And then there was another this is I wanna get your thoughts on Eat, Brinker International. This has had, triple digit earnings growth only for the last 2 quarters in a row here, Jim. Maybe it's not quite the same explosive, growth estimate out there, but it's also hanging in there. What do you make of this while Kava clearly the picture has changed here with Kava.
Okay. We'll definitely talk about Kava. Something's they're having some indigestion right now, but could you go back to Eat and then go to a
Yeah,
monthly?
sure.
You pulled up something that's so darn important. The bigger the base, the higher in space. Okay. Look at GoDaddy. Look at and then
Yeah, it's another
look at
good one.
look at Yum Brands just recently.
Hmm.
Look at that. Look at Coach. What's Coach? TP
Tapestry,
yes.
TPR.
Look at that massive breakout. These
Mhm.
giant bases. I so strongly and now Eat, when it came out of its base, earnings estimates were very, very weak
Yeah.
and they were not on the table. When you see a breakout out of a 3, 4, 5, 10, 20-year base, if the earnings are not on the table, I think you have to hold your nose. Look at that. Look at gold. Look at gold monthly.
The Mona Lisa.
The Mona Lisa, baby. And, commodities cycle do not usually end in 12 months. They're like 3, 4, 5 year bulls. And so anyway, you'll go back to Kava. Kava missed by
Mhm.
2 cents. Now, management here is not a bunch of rookies. Okay. It's not like, a couple guys got together, cooked up an idea, they ran into a problem. They're not going to be able to figure it out. All right.
Mhm.
Kava has 350 stores, something like that. I believe they're going to have way beyond their goal of 1,000 by 2030. I think they could beat it by a couple hundred stores. They maybe have to make a couple adjustments here. Again, this thing's living below the 200. It looks like a disaster. So I've trimmed the position back. I'm max hedged on the thing. And by the way, I
Still
think,
hugely profitable, you had a really low
oh
cost
yeah,
basis.
I've given some back, but uh, it is now extended below the 50. Kind of
Mm.
like I hedge when it gets extended above the 50,
Oh,
it's now
interesting.
extended below the 50.
Hmm.
So if you are trapped in this thing, I would still be very defensive, but it's getting oversold. Doesn't mean it can't puke down to 80 or
Yeah.
lower or whatever, but you're getting extreme here in days in a row down, percentages below, the stochastics oversold, the market's oversold. Um, yeah, this has become a big problem. And again, remember Michael Kors like 10 years ago?
Mhm.
A big problem with Kors was, well, first of all, it was a flashy fashion thing, like a
Right.
troll. It wasn't like Chanel where it is the colors aren't crazy. They have staying power. The Kors situation was every time the stock went up, the insiders offloaded. They did a secondary and killed it.
Mm.
And that happened on the last earnings report. And I'm wondering, is this gonna be a story like that? How long,
Ooh.
how much selling are we gonna have to endure, or are we gonna have to endure in any? I'm just saying it's a possibility. I don't know. But look at Dutch Brothers. This is
Yeah.
really a stock for the time. Now, it's only 5% off the high. I mean,
Says 12%,
well, okay, I'm a little too
but
bullish.
I would say it's holding very well.
It's holding fantastic. It's a
Yeah.
completely different story in the same industry.
Mhm. Yeah. Pretty big base there.
All-time new highs. Now listen, totally would be so happy to see 3, 4, 5 weeks, a month, or 2 months of sideways digestion. If you get
Yeah.
that, and yeah, oh my gosh, if it does that, wild horses couldn't get me from like tripling up my position.
Yeah. Okay. Well, thanks for that review of a couple of tickers. And of course, if there are any others, please shout them out. Just some thoughts from me from Kava. I would say, I didn't get in as low as you did, Jim. And so when it had that first break of the 10-week, I was out, was having a little FOMO when it started to come back. But I would just say, just a reminder for the audience, you have a very low cost basis and you've been hedging. So you're not saying, oh, if you were buying at 140, this is oversold and can come back. It's just important for folks out there to realize where you got in and think about if they got in where they got in and make sure they're managing risk.
Look, much rather clean up in the stock than clean up in the hedges. Okay, because I'm making crushing it in the hedges, I'm still losing it in the stock. I mean, it's just a push. But hey, teacher, call on me. Baba.
Yeah,
Okay,
China is another area for sure.
everybody hates China. You've got Kyle Bass screaming from the rooftops. The currency's going to collapse. The real estate market's going to collapse. They're commies. They've got 2 million people in prison camp over there, and they're
Well,
anti
and the relationship with the US
tariffs.
and the tariffs and the AI war and the chip restrictions,
And what's the
all
volume
that drama,
signature tell you? What's that volume signature say to you, Allie?
that there are buyers.
So Kyle Bass is a brilliant mind. Okay, I'm not picking on Bill, but Bill was my mentor, my guide, taught me everything I know. But he wasn't always right. Kyle Bass is not always right. I follow the market.
Yeah.
This is completely diverging. And
Mhm.
the if you look at a broad chart of the SSE, the largest index in Asia, it is ending a massive multi-year bear market. I mean, like decades. the PE ratio, and I'm not a value guy. I never heard Bill mention PE to me ever.
Mhm.
Hardly. I don't
Except
like.
for how it is useless. If he
Well,
did
yeah,
mention it, that's what he said.
it is a measure of risk. If the PE is crazy high and it doesn't work, you have added risk. But the point is, if this turns up, the compression on that spring, it's just like when it releases and that energy comes out, if they really do turn, like what if the war in Ukraine ends and there's peace and oil prices go down and there's not all this strife in the world and Trump handles the tariffs with these guys and they make an agreement and all of a sudden the lid blows off on this stuff. When you have a bull market erupt from a horrible bear, when the valuations are compressed so low,
Mm,
why
mhm.
did we kill it last year? Because we came out of a bad, deep, long bear market in the US. The bear market we came out of was nothing like the bear market in China. If China recovers, the bull cycle we could get into is goofy. Um, it is more
So then
volatile.
I was just gonna say, yes, it is volatile for sure. I mean, there was that hope of a spark of a move back in September that was short lived. We're trying again here. But how do you play this? Do you go with the individual liquid names like your Babas, of course, picking your spots on the chart, or do you go with something like a K Web where at least you don't have that single stock risk? How are you
Boom.
treating China?
Who are you? Could you endure a single stock gap down? Then if you can't, buy FXI. There's a whole slew. You had K Web and all that up there.
Hmm.
And look, we're now 4 or 5 days, 6 days into a handle here.
Yeah, a little
A,
pullback.
a
Hmm.
well-defined pivot point at 37-ish.
Hmm.
Uh, this is a story that. And now listen, if this thing fails here, forget it. Walk away and go. Um, but I think this is probably one of the best opportunities in the market right now in the growth area. Look at TECHY, Tencent. I mean, this thing is kind of the big blue chip in China. It's a big liquid name. This is an ADR. Doesn't
Mhm,
trade like the local shares, but
mhm.
this is an area that's set up very nicely.
Yeah,
And again, I'm wrong 7 out of 10 things I try. So there's no lock in the world. And I want to just really quick. We have to cover the breakout failures. You mentioned ARC.
yeah.
Look at the breakout failure we had. Okay?
Mhm,
That is that's bad news. And we had it in MDY. And the ugliest of them all is Russell IWM, and the
mhm,
respect it has for the declining 50. That was a really pretty big signal right there. It's
mhm.
super rare that an index can hold, or the 50 can hold an index underwater like that so well. But again, we're getting extreme. We're getting to an extreme historical level below call it the 200 here. Now we could easily gap down overnight or some point in the next week or two that could put a bottom in. But even if that occurs, we NTNX. In my Roppel report, I said it's going to be a race to be the first guy into new high ground. Well, this one won the race. Okay, this is a pure growth name, And now a partner I have is a brilliant technologist, and he's like, people implementing Avago hate the software and they're looking for alternatives. Do you already know this? I don't know. You might have
No,
read
no,
about.
no, no, no. I'm agreeing with you. It does seem like the winners out of the AI Black Swan event in general was the software sector.
If we
So then
turn,
looking for the leaders within that.
in the end of the 2000 bear market, there were a few names that came out about 3, 4, 5 days to a week or two before the bottom.
Mm,
ERES was one of them. You don't have to look at it.
yeah.
If somehow this market turns up in the next week or two, and this name sitting up here like this, it's gone. It is telling
Mhm.
you, right? Look at that. 3 weeks tight, massive volume bar up. Uh, I am very, 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 very interested in this name.
Okay. Food for thought there. Yeah, I think that's the other thing too is, okay, growth may be in general out of favor. The indexes on the ropes a little bit. Will we bounce here in oversold territory? But in the meantime, look for the stocks with that relative strength. What is showing, those signs of life or shaping up, right? Because as you pointed out, those could be the leaders when we do get a turn. So it's important to look for those signs now, even if overall we're in a more defensive posture.
Right now, you should be doing exactly what Allie said, looking for names that are like basketballs underwater. They're sitting just below their highs. They won't go down anymore. They're going to search for leading relative strength lines. That's where you're going to find these names. Um, Run your screens, highest up to down volume, highest RS, highest comp ratings that haven't caved in. And this is so important. Everybody's kind of crying and whining. The market's down. This is the only
Resetting the decks creates new opportunities, right? I mean,
where
how many times are we looking at stocks? Oh, it's extended. It's extended. This, the bases can really, you know, give you those good entry points and a good runway for a move.
the leaders, the real TMLs, 99 comp, 99 RS are 90% of the time extended. Now we have a chance to maybe they're going to base out and give us a shot at them. This is when you should get excited, not crying and whining. If you handled it properly and you haven't given too much money, if you're down 10%, you only have to make 11 to get to even. You can do that in 2 weeks, a week. Like, stop whining. If you screwed up the pullback, you've got an issue. You need to go back and look at what you've done wrong. But let's assume you handled it right. You're down 5, 6, 7, 10, 12%, whatever. No big deal. Run your screens. Don't look away. Do not go, oh, the market sucks. I'm not going to pay attention. This is when you really need to do your homework.
Yeah.
Get that buy list fresh. You know exactly what you're looking at. So when the eventual turn comes, and it's going to come, just like the sun's going to come up tomorrow. Sun's going down right now, but tomorrow morning it's going to rise. And I guarantee you, I don't guarantee much, but I guarantee you a new bull market is going to spring. We're not even in a bear market. We're in a pullback. Chill it, Jim. Guys, keep those buy lists fresh with these awesome leaders, these 99. Now, again, RS has come down on almost everything, but there are still some 99 comp names that have 94, 5, 6, 8 RS. These are the boys you want to be focusing on. So,
Absolutely. Great words of wisdom there, Jim. I do want to ask you about crypto real quick before we leave, because we've seen a lot of volatility there. I know you are a longtime crypto bull. The story there, the long-term view is what you're taking. But in the short term, Bitcoin got hit really hard last week as more evidence of the money shifting away from risk on, more towards risk off, perhaps some other elements there too. But then over the weekend, a reinvigoration of the excitement about policy, related to the crypto Bitcoin, strategic reserve for cryptocurrency, but a pretty big fade here today. Jim, over to you. Your thoughts on crypto as it stands.
I don't have any communication with the president at all, but not making it primarily or strictly a Bitcoin strategic reserve, I think was a big mistake. It's my opinion that he's betting on a lot of protocols that may never be here in 6 years or 3 years. Bitcoin's going to be here. So I think that, again, Daddy, I want it now. Well, it's going to take a long time to formulate the legal work to raise the money for the sovereign wealth fund or strategic Bitcoin reserve, and then to implement it. It could take till the end of the year. So we had this explosion up overnight in a lot of coins that are very illiquid. I wasn't really, again, I have some of them, and I was great, but they've all reversed as people recognize it's not going to happen today.
Overnight. Yeah, it's not going to happen overnight.
But you want to talk about what's happening today? How about people moving into DeFi, decentralized finance? In January 23, there were 2.6 million people who'd moved in. We currently have 17.4 million people who've moved in. Stable coins in September of 23, $1 trillion worth. Today, 5 trillion. Real world assets in 2020, 0, not 1. Today, 16.5 billion. Um, the percentage of institutions coming into TradFi, they're all sniffing around. They're talking to the big boys who are in there. About 2% of traditional finance people have moved into DeFi. They're they're all coming. I know because I'm talking to a lot of developers of these projects. The
Mm.
very biggest banks, brokers, institutions are all coming to see them and they're talking, but they're old dudes in their three-piece suits with their pocket watches and stogies. They're just old guys. They don't get it. Um, the the SEC dropped their case against Robinhood,
Yeah.
against Coinbase. Deribit, the largest options broker, crypto broker in the world, has had two offers to be purchased. Circle, which is USDC, is filed to go public. Kraken is likely to go public. Animoca is launching a stable coin. XRP has beat their legal case against the SEC. The the changes in DeFi and in crypto and in blockchain technology it's growing so fast that technologists say, most of them say, they've never seen something grow this fast ever in history. Faster than the steam engine, faster than electricity, faster than the internet. And it is the first inning. Maybe we're halfway through the first inning, second inning. This is a $3 trillion market, all inclusive of every junk coin and gold, large cap. That's about the size of Nvidia. All right. There will be coins and projects that will be $1 trillion market caps single. And I'm not talking about Bitcoin. I'm talking about protocols. DeFi is probably the most disruptive thing to finance that the world's ever seen. And they're all going to have to go there. So whether Trump has a strategic Bitcoin reserve or doesn't have one, or what's in it, does not change the fact that this is the fastest growing industry the world's ever seen. And it's just one of the many technologies that are coming at us. We talked about humanoid robots. My mom, she's almost 90. She shouldn't be driving. Tesla, she wants to go with her girlfriends, jump in the car, take me to the club, take me to the theater. We've got blockchain. We've got IPOs coming there. Autonomous driving, robots taking care of your laundry and doing all these things. I didn't even talk about AI.
I was about to say, you said, the fast adoption here, faster than the internet. I was going to ask you crypto versus AI.
AI is bigger and it is adopted at a higher level. Companies have immersed themselves into it greater. And something like, if you look at the emerging markets, they've really turned up. And I'm starting to think, I think AI might be a much better, more helpful in gentrifying to the poor, the impoverished, the third world people. Look at these indexes. And I'm going a little bit far afield. Europe, the Eurostock 50, Poland index, the DAX, all in all-time new highs. They look like the war is coming to an end in Ukraine. All of these things are deflationary, all of these technologies. Now, the halt, or not the halt, the pushing out of Blackwell and AI has caused a lull in the market at this moment. But it is a moment. It's like the person you're dating and you're gonna marry him, but you have that little hiatus for a summer or whatever. That's where we are. I don't know if that goes on for another week or 4 or 5 months, but the Fed is going to cut if they have to. And we went from one possible cut to looks like 3 now. Who knows? But I just see, don't be shocked if we end up 20% this year. Do not be shocked. If you don't understand that possibility, you don't understand what's going on in technology.
Yeah. All right. Well, and then in terms of crypto, it seems like the stories there, you've been in crypto for a very long time, years and years and years and years. But in terms of the short-term trading outlook, I feel like we need a new setup here. Maybe we will get a catalyst that is a little bit more sustainable to get a move out of it. So we'll have to see there. But in general, Jim, it seems like we got to chill it, then we can kill it when the market turns.
100%. And not we're going to kill it. Okay. I read history books about the market and I have to close them because I know what's coming. If you look through history, with all these disruptive technologies, it's inevitable. They're going to go public. They're going to have monster sales and earnings. They're going to make a perfect cup and handle, and they're going to come out at us in all the cycles we've had of innovation. We have leaders in that specific area come out and they produce 10, 15, 20 TMLs over a long span. We have 5 technologies. They're going to throw 10, 15, 20 at us every year. Like, this is the most target rich environment we've ever been in. And I've been doing this for 40 years. And if you read history books about the market, it's like, oh, yeah, well, we had a downturn, then another bull market broke out. That's exactly what's going to happen. The money that's going to be created in the next 10 to 15 years in this revolution in technology is going to create more wealth than any cycle ever in history. And people who use CanSlim are uniquely positioned to make money in this. And now CanSlim is not working at this minute, but the gold bar list is a new high. And there's going to be hundreds of stocks that are going to go from 50 to 500, and they're going to have to make a new high all the way up. CanSlim is uniquely developed to capture these innovative leaders. And I almost can't sleep. Like, I can't sleep because the market's crummy right now. But when it's good, I can't sleep because I know what's going to happen.
Mm-hmm.
Basketball's coming up out of the water. Just a matter of time.
We'll be ready and waiting. And Jim, one thing that you're making me think of with this is, people in hindsight talk about how great the 90s were. Well, look at how many pullbacks and corrections there were during this time. It wasn't just straight up. There were periods of digestion and consolidation, even in this super strong internet boom cycle.
Fear and greed does not disrupt. It just, that's the way it is. Through every innovative cycle, things get overbought, they get oversold, and we're getting close to oversold right now. I mean, could we go down 4 or 5 more percent? Absolutely. But I don't think we're having a bear market here. At this minute, I could change.
Yeah. Yeah. You reserve the right to change your mind, and we'll be flexible and ready and waiting. Thank you so much for all of the tools and tips throughout today's session, Jim. Appreciate it as always. Thanks for weighing in.
Thanks for having me. Love doing it. Everybody subscribe to the Roppel Report. Cheers.
Cheers, everyone, and see you next month, Jim. Thanks for tuning in, everyone. That is it from us for this month, but we will see you back here next month for another monthly market report. Looking forward to it as always. So we'll see you then, everyone. Happy trading.